Hello Maverick traders, this is Imri and welcome to today's market roundup. Well, it was definitely an exciting close to the equities trading session. The S&P closed down a little over 2%, almost 2.5%. Cryptos were more or less flat on the day. Gold was slightly down and oil pulled back a little bit as well. So we definitely paired the recent gains in the market, and I keep referencing this resistance area in the S&P and the total world stock index, and we just can't break above it with any strong conviction, at least not yet. I think it's far too early to say that the rally so far that we've seen off the May lows is nothing more than a bear market rally. I think it's too early to say that. The market's still kind of trading in this no man's zone. I'm very interested to see what the overnight trading activity in the futures is going to look like. But the bottom line is that until we break convincingly above that shaded resistance area on this price chart, equity markets, are going to struggle to get back on bullish footing. And it's no different over in the total world stock index ETF as well. You can see that resistance area is just working really, really strongly time and time again. So we'll see if global investors are confident enough to take another run at that resistance level and break above it. But it's a similar story to the S&P in that regard. Coming over to crypto, it's just flat, just sideways. This is probably going to break down. It's probably going to break lower. I think we need one more push to the downside. And I might be sticking my neck out here, but I think that next push to the downside is going to conclude the entire bear market in cryptos. So we'll have to wait and see. We'll have to see what that decline looks like. But I'm just finding it impossible to be bullish on the broader crypto market quite yet. I'm going to give this market a -1. We did close below the 50-period moving average. We're below we're below the 20-period moving average. We're below the 50-period moving average, and the slope of the moving averages is somewhat neutral. Going over to the economic calendar, we do have some news coming out of Canada and the US tomorrow, so that's going to be interesting. We have some employment numbers coming out of Canada and some inflationary figures coming out of the US, which you can bet people's eyes will be on those reports, especially the inflation report coming out of the US. So we'll have to wait and see if those news releases bring any volatility with them. Moving on into currency analysis. So first off, we've got cryptocurrencies. It was pretty much a flat day across the board. The only exception really was Solana and Cardano having relatively good days, whereas the larger cap cryptos were mostly flat or barely down on the day. Not anything exciting going on here. And in the fiat world, given the risk-off nature of today's trading, it's no surprise to see that the yen and the dollar were relatively outperforming their peers. And again, no surprise to see that the biggest losers included the commodity currencies. Impressive that the pound put in a reasonable showing, however. So in terms of velocity, it's really interesting. We definitely do have some outlier velocity scores, both on the negative side and the positive side. And whenever I see that, I get excited because it means there's a potential for a trading opportunity, especially if we have a catalyst like a news event that can help move some of these currency pairs along. So we're going to take a look at that right now. So first off, I've got the Aussie dollar currency pair. I do think that this sell-off is going to conclude with another push higher in the Aussie. The question is from what levels? On the 4-hour price chart, the RSI has not gotten oversold yet. That's definitely something I like to look out for, especially on the higher time frames. But we have a little bit lower to go. My hunch is that we might start finding support somewhere in the 70-50 region. So if there is a tradable setup on a lower time frame, I think there is a bit more runway to go short here. But honestly, if you didn't get in near the I'd say closer to the 71.5 to 72 handle, there's probably not enough juice left to squeeze out of this trade. So I'm interested to see if tomorrow, off the back of the inflation report, the dollar can pick up some steam. There might be a trading opportunity. There might not be. We'll have to wait to see how the overnight action looks. But if there's a clear pullback, like a bear market rally that we can short into tomorrow's news event, that'll be pretty interesting. And on the other hand, if overnight we just trade substantially lower, then it's possible that the stage is set for an intraday reversal tomorrow off the back of that news event as well. So Aussie dollar could be played either way, depending on what kind of trading we get overnight. I'm pretty confident we are going to get that little push lower, however, before the market starts to turn up. So be prepared for that. And over on the euro, I think the euro is potentially coming into some support here. The RSIs definitely still have a lot more room to go before they're oversold, at least quite a few pips of downside before the RSIs get oversold. But ultimately, I do believe that any sell-off in the euro relative to the dollar is going to be corrective in nature, which means my expectation is that over the coming weeks, we will take out the prior highs and test around the 109 area that I have up here on the price chart. As far as potential support areas in the euro, I'd be looking at support somewhere between 105.69, which would be 50% correction of this entire rally, and of course the golden ratio, the Fibonacci retracement level of 61.8% comes in at 105.17, 105.18. So a little bit lower. So I definitely do think there's quite a bit of room to play the euro to the downside. But I really think the next big move is going to be higher, not lower in the euro. Dollar Canada, I've been waiting for this one for a long time. So we've been trading lower pretty much since early to mid-May, and we finally bounced hard and broken out of this price channel. I'd be looking to buy Dollar Canada on pullbacks, in my opinion. I think that's a reasonably high probability strategy here with potentially excellent risk reward profiles. So I'll be looking to buy pullbacks in Dollar Canada for, unless, I guess another way to put it is that I'm bullish against today's low, which is 125.45. All right, so I'm bullish against 125.45. And then finally, Aussie yen. I mean, geez, this thing was incredibly extended. We're starting to see some bearish divergences in the momentum indicator and the RSI, and in the RSI that is, and the MACD has finally rolled over on the 4-hour time frame. So I do think if the risk-off behavior in equities continues, then Aussie yen, potentially Kiwi yen and Canada yen would also be great shorting opportunities. I think Canada yen, which we're going to take a look at right now, could also be a potentially exciting trade. We've traded into a target zone that I had here somewhere between 105.5 to about 107.5. So it's a pretty wide range, but the momentum signature looks really exciting to me. I love the way the RSI just almost went vertical here, and I love that the MACDs have started to turn down with a lot of room, a lot of space between the MACD histogram and the MACD moving averages. So I think the stage is set here for a little bit of short-term, at least short-term yen strength after an extremely extended move to the upside. The entire market, I think, is pretty much short yen at this point, which means it begs the question of how much weaker can the yen get before we get a snapback in the yen. So that's what I have as far as fairly short-term, fairly timely trades to look out for. So in conclusion, equity markets have pulled back quite sharply. So if you are trading tomorrow, just make sure that the velocity is there, all right? Especially if you're looking to be flat as you head into the session's close, make sure that the velocity is there on the short-term charts in order for your trade to really be working out. And as always, keep your position sizing in mind and ensure that you're not oversizing your positions. So stick to your trading plans, plan your trades, trade your plan. Have a great trading day tomorrow, and I'll see you guys next week.